Let's now look at the bearish butterfly pattern. Here again, as with the other patterns, the first thing I want to look for is the key area of resistance or support. In this case, we're looking at a resistance zone found from the daily or 4-hour chart. As in the previous example with the bullish butterfly, I'm looking for price to drive up towards the key resistance zone and then fade just short of the level. So as we described in section 2 with the order flow, with the orders stacked at different levels, we have orders coming in just below our key level of resistance, pushing price lower. On this initial move down, we label it X to A. We then look for a retracement of the XA swing, and we're looking for a very specific retracement here of the 786 or 79% retracement. We label that point B. We're then looking for a retracement of the AB swing, and this retracement we're looking for any from a 38 to 886 retracement. We're now looking for a move to the upside, and as with the previous example, we're looking for price to push right up, taking the X point out, or the highs at X out, and pushing right up into that key resistance area to fill those orders. Remember, orders stacked at different levels. We label this last little retracement C, and we're looking for this drive up into that level. And what we're looking for is we're looking for the extensions of the AX swing or the XA swing, 127 extension, to line up with the AB or BC extension or projection, 1618, and the 127 extension or projection lining up, forming a very tight confluence. It's at this level right here, this highlighted area, we're looking to place a sell limit order. This is point D, and the stop loss will go just above the XA 1618 extension, which is not shown in this example, and we're looking for a drive lower. So recap, we identify our key level of resistance from the higher time frame, daily or 4-hour chart. The pattern itself is found anywhere from the 5-minute, I like it up to sort of the 60-minute, maybe even the 4-hour chart, depending on the risk. We're looking for the initial surge up, a retracement, which we label XA. We then look for another rally or retracement of the XA swing this time, which is very specific, 79% retracement. We'll show you when we go over the actual trade examples why we choose a 79 retracement, because the 127 and the 168 extension line up very, very tightly, forming a very nice confluence. And we're looking for a retracement again of the AB swing that we label C. That can be anywhere from 38 to 886, and then we look for a thrust up, and we look for a sell. The way I like to trade this is a sell limit at the 127 1618 extension, and I'm looking for a stop loss just above the XA swing, the 1618, which sits around here. Stop loss just above that level, and I'm looking for a move to the downside. Here again, as with the other examples, if the key level is not there, I'm not interested in taking the trade. Okay, very, very important.